Hello, trading is closed on May the 8th, 2020. Let's go over our calls. Had a target of 2900.02 that was easily overcome. Looked for a gap outside yesterday's range. We got that. And we called for the pattern with the early high, which this is. And here's what we said. Gap outside the range, quite likely. Early high, yada, yada, yada. Monday's pattern also has an early high. During the day, we got an ultimate buy and an ultimate sell signal in the morning. Typically, when that happens, you get prices lower, prices higher, and you go nowhere for a while. And it wasn't until right at the end that we broke out of the range. This really isn't a wall, but still late in the day on a Friday typically isn't when big money chooses to break out of the range. But when you rally all day like this, particularly on a Friday, it tends to carry over into Monday. So most of the time you would see higher prices when we open Monday. And because that's what typically happens, if the opposite happens, if we gap down smartly, it's quite negative. The general idea is this, that we're up against strong resistance and that last week's high we're thinking will hold. We don't know if this is B or A of B, but it looks like we have A and then an ABC completed. We're looking for a drop at least to 350 points from this line, and that's still about 100 points south of where we are now. So we still have lower targets. Of course, if we keep rallying and you measure from up here, it doesn't have to be. The question is this high going to hold? Right now, we've stopped right at the 61.8% retracement of the big drop. It's a resistance area. Just because you're at resistance doesn't mean it has to hold, but it's one logical place for the rally to run into trouble. We're calling this drop as a 5-wave impulse. It's non-overlapping, it has good fibs, and it's a reasonable count. If that's true, then this corrective wave, which is an ABC, is overlapping and has good fibs. If that's true, this corrective wave shouldn't go over this high of 2954.86. And if it does, then this count isn't an impulse after all, or something else is wrong with the count. We have now, in this last wave, ABC with C equal to half A, all these fibs work, and here's a double top at the end of the last up wave. Here's the intervening low, and typically that's a resistance area, which we hit today and then reversed. So in addition to the 61.8% retracement and the fib pattern, which is potentially complete, you also have resistance from this. There's also perfect trendline resistance that goes back to 2018. Now, none of this resistance has to hold, but if we do stall here, at least we're stalling in a logical place. We should know, I think, by the open if that'll hold. Now, Monday's pattern has an early high. Usually it's a rally day with the high in the final hours. And if in the final hour, and if we get the usual, that resistance isn't going to hold. But failure is a straight line drop. The day-long rally should carry through into Monday's open, but if we gap down smartly instead, that's quite negative. The volatility index has reversed from a brief excursion under its lower Bollinger Band. It's not the strongest sell signal I've ever seen, but it is one. If the wave count's correct, and that's not a lock, we should be within 1% of the high of this leg. If we go higher than that, the wave count's just wrong. Friday's high is at the top of a significant resistance level. Wave count's compatible with the high of this leg being in. If you're a bull, we need to avoid a strong gap down, and we have to continue the rally past today's high. And if we do that, then the bears have missed a good opportunity. But if, and that's an if, we gap down smartly instead, I think the odds are pretty strong that this corrective wave here is over. So we'll have to see how we open. It's a day with the early high. Usually it's a rally day, but if we drop with conviction right from the open, that could be the top. And that's today's call.